Welcome back, everyone. This is Thomas Triple T Time with another new bullish crypto analysis. Before we dig in and take a look at the Ethereum weekly analysis, remember this is for edutainment only and not to be considered as financial advice. Additionally, when you feel value has been added, feel free to smash the like, ring my bell, hit subscribe if you haven't, and share your thoughts in the comment section. Let me see. Let's go into the news first. One of the pretty cool news I saw from Bloomberg was this commodity expert, expert, I guess. His name is Mike McClone. He said that the demand is increasing and supply is declining, and Ethereum's position at the epicenter of the digitization of finance and money suggests further price appreciation. Ethereum, the denominator for NFTs and top platform for tokenization, is becoming the collateral of the internet. Well, Mike, welcome to the cryptoverse. We know that about Ethereum, but I'm glad you're there. He's just basically saying that Ethereum is one of the best crypto you can own, and he considers it a commodity. So, cool. All right, let's dig into the chart. I made some changes on this chart based on feedback from some of you. Thank you for that feedback. I made it brighter and more bold, with some of the lines being thicker, and increase the contrast in some of these indicators. And hopefully, this will be easier for some of you to view it on your smartphone. I'm looking at a 4K monitor, and it looks pretty big to me and pretty bright, but all of the devices are different. So I would love to hear your feedback, and thank you for the continuous feedback to help me provide content that's easier for you to view and understand. So let's dig in. Got my mouse highlighter here. So after two consecutive bullish weekly candles, Ethereum's printing a bearish candle here. It was a doji, but it took me so long to prepare this chart. I started this chart in the afternoon, and by the time I came back from my bike ride, the doji became a thicker body candle. So, and it's at a critical intersection here, and I'll talk more about this intersection in a bit. It's currently at roughly around 3250 or 3250, just below the neckline of this double bottom here. The double bottom pattern is a bullish pattern, because if it breaks above the neckline, it can keep going like on the first leg here, shoot up. Unfortunately, it broke slightly above the neckline and retraced back down. A lot of that was driven by Bitcoin and the crypto news that came over the UK Parliament, where they the vote hasn't finalized yet, but it passed through one of their groups over there, where they're saying that each wallet, each exchange have to identify their users. And it's gonna hurt the crypto market. Anyways, I did a video on that earlier today. Feel free to check that out. It was the Bitcoin video. So it got up just above the neckline here, and then bad news came, dropped back down. Currently, right here, if you look at it, it's below the neckline, this horizontal line here. And if it can't break above that, it more than likely will retrace back down. And if you look at the bull market support band, the top of the bull market support band is currently at, let's see, right around here. That's roughly 4,589 over 4,590 roughly is up here. The bottom of the Bollinger Band down here is at 2010. And so it's in the middle, literally right smack in the middle of the Bollinger Band, which is roughly at 3,300 You can see that up here. If I move, once I move my mouse out, see right there, 3,300. That's the middle, the basis. So it's in the middle of the Bollinger Band. Additionally, here's the bull market support band. This little grayish, bluish ribbon here. It's smack dab in the middle of that. It was above that, which is very bullish, but now it's fallen in right in the middle. Furthermore, it's just slightly over the 50-day moving average. Breaking above that was very bullish, but now it's dropping down toward it. And so this intersection, it's crazy that it's all these indicators are coming right together right here. So critical support, critical resistance right here. If it drops below this intersection point, it's more than likely going to go down towards this next support level, which is 2,900. But if it could very likely crab sideways around this area, which is around 3,300, or chopping between 3,200 and 3,300. The 50-day moving average is currently at 3,173, so almost 3,200. So yeah, it's gonna be choppy right there. Let's go down and take a look at the indicators. The ascending J line of the KDJ, it was ascending, then it flipped almost horizontal. It went from 95 right here to 99, and it's in the upper overbought zone. 80 is the start of the upper zone, and so the blue and the blue K and the reddish D line are also slightly bending almost horizontal, but still trending slightly up. So I gave that a bull and a crab. A bull because it's still trending up, but more than likely it will go sideways if this pattern continues up here. Down below we have the white MACD line curving up from the bottom and almost touching the reddish signal line here. It went from negative 148 to negative 118 and printing the 17th less reddish, shorter histogram bar. And you can see how this thing curves up here. Eventually it's going to go above the reddish line and it's going to start printing bullish histogram bars. But for now, it's still bearish with bullish trending. Down below, we have the ascending RSI line. It was ascending and then it bent almost horizontal. It went from 52.43 to 51.19, and it's still a bull, but it's more crabbing sideways. So that's more like a bull and a crab. I should change that. Anyways, yeah. The ascending CVD line flipped horizontal. It's hard to see. Let me zoom in for you. You can see that here's the CVD line here. It was ascending and then flipped down here. Need to find my point again. So it flipped almost horizontal. It went from 17.876 million to 17.858 million. I gave that a crab. The ascending white momentum indicator continues to rise, and it went from negative 54 to 680. So that gets a bull. I should change this. That's no longer, it's more like a crab and a bear, really. More like a crab. There we go. Slightly bearish, but okay, that's good. So that's where we are with this. Overall, I need to change this summary here too. I think it's gonna more likely crab sideways with it's gonna be choppy, and it's gonna have a potential of a downward trend. I think it's gonna be really choppy. Oops, sorry, copy the crap here. Yeah, I think it's gonna chop sideways for a bit, but if it breaks here, that's where the bear comes in. So choppy overall, bear if it breaks below. So let's take a look at some of the, oh yeah, hang on a second, let's go back. I put a summary here for you, and here's some max pain, but we'll go through the max pains. So summary, basically, if Ethereum drops below this intersection, it could head towards the next support at 2.9K, else it'll consolidate sideways from 3.2K to 3.3K. Let's go through the max pain price. Max pain for April 1st is 3K. April 2nd is 3.3K. April 8th is 3.1K. April 15th is 3.3K. And here's the heat map. We got sell walls up on top, buy walls below. Let's go through them. We got 3,500 sell wall up here, roughly 3,450 here, 3,400 here. Down below we have more buy walls. We have 3,200. We have one at 3,150, 3,100, 3,050. We have one at 3,000, a big one at 2,900, and we have some smaller ones down below, 2,800, 2,700, 2,800, 2,780, 2,760. And there are more below, but until we get low down in this area, I'm not going to go down there because the heat map, actually, it gets so congested for Ethereum because of so many data points that it gets really slow. Now the liquidation levels, we have more longs here. And we have about, I think, 400. 480 on the overage of the longs, cumulative liquidation delta. So these are the long, high leverage liquidation levels. You subtract them from the shorts. You don't see them here, but basically all long liquidation levels here. And that's the open interest, about 480 million. So if price goes down, these guys will get liquidated. So that's it. It'll be interesting to see what is going to happen the rest of this week on to next week, and where I'll return back for another analysis. So I thank you for your time. This is my last video for today, and I'll see you in the next video early tomorrow morning. Peace. Remember, hit subscribe, smash the like, ring my bell, and leave your thoughts. And let me know if, let me show you again. Oops. If this is more clear for you. And I also mentioned on Twitter that I'll be cutting the audio tracks in the future videos so that I can publish them on a podcast, because some of you like to listen to it. So let me know. Thanks. Peace. And good night.